Hello, folks. Good morning, good afternoon, good evening, wherever you are. So, this is our day one, lecture two of complete order block model. So, here I'm going to be sharing with you all how I get my high probability order block trades, where I find them, how they appear. So, a complete market structure with order block, how to find them, where to find them, when to find them, all that stuff. So our high probability order block in this market structure will be appearing at the 0.5% of our previous dealing range, of our old dealing range. I'm going to be showing you guys more example of this. So with time it will become very easy because the structure is very easy like that. So here in this example you can see that we have a swing low here, swing high here. This is just a market structure that I'm showing you. I'll show you the real chart, and that's where you will see real example as well. So this is our swing low, swing high. This is our midway of this dealing range. Now we have a retracement, right? We are reaching for the discount of the PD area, and this is where we will find our high probability order block coming at previous dealing range is 0.5%. That means at the discount, if you are looking for a long, at the premium if you are looking for a short. So in this example I'm showing you longs. So our high probability order block will be forming at the 0.5% of the DR, this dealing range. So once you find the high probability order block, I'll be showing you guys the pattern as well, how a high probability order block looks when it appears here. So when it appears here, we'll be taking your entry with a stop loss at this part. I'll be showing you guys that as well, and the target is gonna be the recent lead generated swing high, which is the dealing range high up here or even more. So ideally you'll be targeting in this scenario 2R. Sometimes price offers 3 to 4R. So in this scenario, with this model, you are getting like minimum 2R to 4R on a consistent basis when they appear. So it's very simple. You are basically looking at order block, the pattern appearing at the 0.5% of previous dealing range, not this one. This is our current dealing range, okay? We have a low yet to be created down here. So once we got a new low, this is gonna be our new dealing range coming inside the previous dealing range. But for this model, we are gonna be focusing here. Once we see the retracement and we are bullish, we're gonna be looking at the 0.5% of this dealing range, and this is where the pattern will appear. Now let me show you how the pattern looks like, what type of entry signal you will be looking here. So first you will have to identify the pattern, right? You identify the dealing range from this low to the high, then the pattern will appear here, and now I'm going to show you guys what pattern to look for at 0.5% of DR. So this is our second slide, Enigma key pattern. And this is the pattern that you will be looking for at the 0.5% of a dealing range. And this pattern will form if you are long at the 0.5%, if you are short at the 0.5%. So for long at the discount, for short at the premium of 0.5%. Here I'm giving you guys the bullish example. It's very similar with our previous lecture on order block. This is our high probability order block profile 2, and this is our pattern, and we are applying this pattern at the 0.5% of our previous dealing range, right? So I'm going to show you guys the other part of the picture in the next slide, where you will have price action here, but this is the pattern that you will be looking for at this part, right? So whatever here we have here is also important, but for now I'm showing you how the pattern will look. I'm introducing you to the pattern, and this is the pattern that we'll be expecting to see here. So now we have two types of pattern that will appear at the 0.5% of the dealing range. So this is the first pattern that usually comes with order block, right? This is our high probability order block profile 2 with no fair value gap or inversion, and here you can see we have an order block coming with inversion. So when you get a scenario like this, this is also high probability, and you have a scenario like this, this is also high probability, but this is more high probability. The scenario that has inversion is more high probability than price just generating a order block. So it depends on what type of scenario price want to offer, but you'll be looking for both of these scenarios. You'll be looking for an order block without fair value gap if price offers it. You'll be looking for an order block with inversion if price offers it. What's the difference? Why this is high probability? Because it offers a very tight stop loss. When you see an inversion like this, now this inversion is also coming at a key level, so it's important. Order block has inversion, so as soon as price closes a candle's body above this inversion, your entry can be at the next candle. That means at this candle, your entry can be at this candle with a stop just below the inversion. Now in this scenario, price closed the candle's body above, and that's when your order block got activated. Okay, you don't take any entry as long as you don't have a closure of a candle's body above the order block. If it's a bearish order block, then below. If it's a bullish order block, if you're looking for long, then it's above, up here like this. So here we have inversion. You'll be waiting for price to close a body, then take an entry at this candle or at this candle or at this candle. So you waited for price to close a body, entry came when price retested this inversion with a stop just below the inversion. The same thing repeating here. The difference is you don't have an inversion here, so you'll have to wait for price to close a candle's body above this order block and then take an entry as soon as price retests this order block with a stop just below this order block. Makes sense? So now you know what to look for at the 0.5% of DR. This is the exact same pattern that I'm going to look for at the 0.5% of DR. Now let's take a look at the next slide, where I'm going to be showing you the example. More examples like this will be coming inside our backtesting session. That's when we'll be looking for each and everything that we learned with this lecture, if we can find it on chart as well. And that's going to be happening when we are doing backtesting sessions. So to see more examples, you will either have to go on my stream, or you will have to wait for the backtesting session. So this is here, you can see the example. You have a dealing range down here, dealing range high up here. So low, up, and 0.5% of the dealing range is coming here. You saw the retracement, right? You wait for price to hit the 0.5% and to present you which pattern. These two patterns, okay, you don't know which one will appear. It totally depends on price, what it want to present to you. But if either one of them are getting visible, then you know what to do. So 0.5% of the DR, you already know this is where you will find your high probability order block. Pattern formed at the key level. Look at this slide here, 0.5%. You got the order block. Now here we got an order block without the inversion, see that? But how do you manage your position in this scenario? 0.5% pattern appeared. You wait until price closes a candle's body above this order block, and then you have a reversal signal, and then you can take an entry. Here you can see we have order block, we close the body. As soon as we tap into the order block again, that's your entry targeting the buy side liquidity or recent swing high that we have up here. Ideally you guys can go for 2R, which is very simple in a scenario like this. So you now learned what type of pattern will appear. You now learned what type of pattern to look for at 0.5% of a PDA. Now in this example, okay, you can ask me, Hydra, how do I know the price will reach for the 0.5% of the DR? There's always a chance to know, and in this example I also have a small market structure. Do you see an inversion here? So price close the candle's body below the inversions. Those who watch my stream or inside mentorship, you guys know that inversion like this are very important to give us the directional bias. Once price close the candle's body below, you can expect price to reach for the 0.5% of the DR, and then wait for this pattern to appear and price to close the candle's body above the order block, and then take the entry. It's very simple like this. If you don't have any fair value gap like this, all you have to do, just wait for price to reach for the 0.5% DR, wait for pattern to appear, wait for price to close a body, wait for price to do a retest, and that's where you take an entry with a stop below the order block. So I hope you guys understood this example. Now let's take a look at our next slide. So So in this slide, you have a complete example with all the other things. This is where you'll be taking an entry. As soon as we do the retest, your stop loss is going to be coming down here. Here we can see different profiles. Okay, we have multiple profiles with order block. There are a couple others that I'm going to share with you guys very soon, so you'll have to be patient with it. But here you can get an order block with fair value gap that can turn into inversion later on, or you can get an order block without any fair value gap or inversion. Makes sense? And an order block, see in this example, I'm showing you an order block with a stop hunt. See that we have a swing low and then a stop hunt. So that's also an important thing. If the order block is appearing with a stop hunt, then it's more high probability than the order block that comes without a stop hunt. Makes sense? So you got a stop hunt, reversal, bullish PDRA, price close the candles body above. So suppose there's no stop hunt here. How will you see this pattern? If there's a SMT, only then you are allowed to do a long. Okay, I didn't make a slide on this, and this is one of the most important part because I don't want it to get leaked. You saw a stop hunt here, right? So if you see a stop hunt, there's nothing to think about. You are getting an entry as soon as price closes the candle's body. But if there's no stop hunt, suppose we have a lower low here and we don't have it, we have a higher low, then how are you going to be trading it? You will be looking for a SMT down here. If you see a SMT, then you're going to be waiting for price to close the candle's body above the order block and do the same thing. If there's no SMT, right, then we'll be avoiding the scenario, and a short will be more high probability because there will be equal lows. So I hope you guys get it. When you say SMT, you don't think about it. Sorry, when you say stop hunt, there's nothing to think about. Pattern appearing at the 0.5%, price closes the body and you take entry. When there's no stop hunt, you look for a SMT. If there's a SMT, you go for that SM entry. If there's no SMT, then you avoid this scenario. So when to avoid this scenario? When there's no stop hunt and the order block coming without a stop hunt, a order block coming without a SMT, a order block coming with relative equal lows is when you will be avoiding this scenario. Entry here, stop loss. You can put your stop just below the order block, right? It's safe there. Or if sometimes when we have inversion here, you can put it below the inversion as well. So now I'm going to show you guys how to predict reversal with this structure. I showed you a trend continuation, right? Remember this structure is a trend continuation structure. We are not doing any reversal here. Now I'm going to be showing you guys the reversal as well. So this is the reversal structure. Our previous dealing range, we're hitting 0.5% of the DR. Now this time the structure will be a little bit different. Once I show you the market structure, what type of key pattern to look for, then you will understand. It will become more easier. Here at the 0.5% of the DR, we got a resistance, but this time we are not going for a long, we are shorting. And how do I know that, Hydra? It will be answered at the next slide. Take a look at this slide, Enigma key pattern. Again, this is your reversal pattern. Okay, if you get this pattern, then it's going to be a reversal. You're going to be going for a short rather than going for a long. What's the difference? Very little difference. Okay, now here this pattern is appearing at the 0.5%. This is exactly the same as what we had before. See, we have a stop hunt down here, right? Now these down close candles are our order block. If we push higher, close the candles body above these down close candles, it's going to become our high probability order block. We can go for a continuation trade. But the difference here is we are not reversing, right? We are respecting these bearish order blocks here. Remember in our last example, we had one bearish order block. See? We had a stop hunt, we had a bearish order block, but why did we long here? Because we came up, we closed the body above this bullish order block, and that's how we got the signal to go for a long. So it's very simple to take the reversal. If price is not activating these order blocks, then it's going to respect this bearish order block. So see, this scenario is providing two opportunities. All you have to do, patiently wait for either one of the opportunity to present itself and then go for the trade. Now in this pattern, see the difference, we have a stop hunt, but after that we don't have any reversal. We have a stop hunt in the next one. And look at this candle, right? It opened here, it came up, it revisited these two down close candles, which are bearish order block now. It also generated a fair value gap. And in the next pattern, look here, we came up, respected the fair value gap, and then we went lower. So this is your reversal pattern. What's the difference? I'm gonna go through the difference again so you guys don't ask me question afterwards. The difference is, when it's a trend continuation, you have a stop hunt, and after that price activating the order block, price closing a candle's body, then activating the order block. And in the next example, price doing a stop hunt, but after that it's not activating a bullish order block. See how simple it is. So this is what you are doing. You are waiting for price to either go up, activate it as a bullish order block. If not, if price is forming a pattern like this with order block, see the fair value gap here. So whenever you see order block with fair value gap, that's a high probability signal for entry. This candle is also a chance for entry. As soon as we got the retest of this order block, that's the entry with a stop above this order block. Now this is for more experienced. As a beginner, you won't understand it, okay? You won't see it. It's gonna happen too fast. You'll have to train your eye to see the reaction here. For me, I usually take entry at this candle. As soon as I see the retest of this order block, I take an entry. But as a beginner, you can wait and still you won't miss that entry, okay? There's no FOMO in trading when you know how to read price. So you got a candle, bearish fair value gap, right? Retest of the fair value gap with order block, then a drop, sharp drop towards sell side. Now let's take a look how this will, let's take a look at the example of how this will appear on chart. Take a look at this chart here. Now this is our dealing range low, dealing range high. Now we are at the 0.5% of the dealing range, right? This is where our high probability trend continuation or the reversal order block pattern will appear, right? So here, what do you see? I wrote here, draw on liquidity determines what type of pattern will appear, right? If the pattern is gonna be a reversal pattern or a trend continuation pattern, it totally depends 100% on where the DOL is. If the DOL is towards sell side, then the pattern will appear as a reversal, right? How do you know that price will deliver below sell side? It's these equal lows. Those who are familiar with my teaching, this is what we target. This is our one of the highest probability target, these relative equal lows, right? So these are these swing lows determine if our pattern is going to be a reversal or a continuation. So suppose now that we have relative equal lows down here, we are expecting reversal. Suppose there's no relative equal low. Suppose we have a stop hunt below this low and we have relative equal highs up here. That time you're going to be looking for a trend continuation order block pattern appearing at the 0.5% of this DR. Because where is our draw on liquidity? Our draw on liquidity is towards buy side, right? Here, draw on liquidity on sell side. So now in this scenario, we're going to be looking for a reversal pattern. So I hope you guys understood. This is a very important takeaway from this lecture. Draw on liquidity determines what type of pattern will appear. You want to look for a trend continuation pattern, then go and find out where the DOL is. If the DOL supports a trend continuation, then you know what to look for here, right? So now let's take a look at our next slide, and there I'm going to be showing you the example of the reversal pattern. So do you see it? We have up close candles, right? We have swing low, we have a stop hunt. Now at this part you wait and you see if price want to activate these down close candles as a bullish order block. So if you will take a bullish, you will take a long, you will look for a long if there are targets towards buy side as a equal high. If there's no target as a buy side, if there's no target towards buy side as a in a form of equal high, rather when you have target towards sell side in a form of equal low, you'll be looking for a reversal pattern. So we got a stop hunt, right? These up close candle now becoming our bearish order block. Now see, this is the exact same example I showed you guys as Enigma key patterns. Let's take a look at our Enigma key patterns. We got a swing low, stop hunt, no reversal, right? We are respecting these order blocks. Order block came with a fair value gap. Fair value gap is where you take an entry with a stop above the order block. What's the difference between this pattern and our trend continuation pattern? Once we go below this low, in our trend continuation pattern, we are activating this bullish order block. In our reversal pattern, we are respecting bearish order block, right? So the same thing here, see that 0.5% of DR. We got a little bit of push higher, some up close candles. Then you got the low. We got a stop hunt, fair value gap. That's your entry at the fair value gap or at the order block's body with a stop loss just up at the 0.5, just above the order block. Now the order blocks here can reach 0.5% of this stealing range. Okay, this is the last jam, the last rule that you need to know to use this structure and make hell of a lot money. The last rule is price can sometimes retrace 0.5% of this stealing range and still go lower. When it's gonna do that, the rules are still gonna be staying same. You will wait for price to go lower, go below this, activate these up close candles as a bearish order block like this, and then you will be looking for a short. I'll be showing you guys more examples of this market structure in our backtesting session. There's another market structure that is left to cover inside our order block day one lecture. It's going to be coming very soon. So now backtest this pattern is very informative, very easy to see, very eye friendly, and I hope every one of you understood it. There's another lecture that is left. Once we do that, we'll be going for day 2 of our 3-day workshop. So I hope everyone find it informative. If you have any question, don't forget to ask me. Okay, until then folks, I'll be seeing you, catching you guys in the next lecture. Until then, take care, good luck, good trading. If you have any question, feel free to ask. Email me at hydra.trades7@gmail.com and I'll get back to you as soon as possible.